Hi everyone. In this video, we will discuss our technical analysis thoughts of the S&P 500, Dow Jones, and ASX 200, along with the latest stock market news. Stay tuned. Well, guess what everybody? I'm officially shut down here again in Australia for the next 6 weeks. But I think this is going to bring up an interesting thought process when it comes to trading the markets. Today, I heard from quite a few people that after this announcement that we were going to be shut down for the next 6 weeks, everybody was quickly rushing to the supermarkets and a herd of people were waiting in line, waiting to get their groceries before the shutdown. Now, does the shutdown stop us from going and getting the groceries? It certainly doesn't. But what it does do is it creates that herd mentality of what happened last time, which is running out of toilet paper, running out of pasta, running out of everything at the supermarkets. We don't have a supply problem here in Australia, but people are freaking out. Now, as a trader or an investor, you want to take advantage of that kind of process, that kind of mentality. You've probably heard of following the trend, but you may not understand what following the trend and following the herd is as a difference. We as investors and traders want to be with the big money, with the big boys and girls playing the markets and trading them in the directions to and fro. Basically, we want to be in this game for the long term and we want to be able to recognize opportunities. So today we'll be talking about that and much more with a lot of technical analysis and hopefully everybody enjoys it. So usually I'd talk about the news here and what's happening today, but realistically no one has any idea what's going on with the markets right now other than we've got the Fed backstopping it and we have some key bits of news, but it's really just everyone's opinion. As an investor or trader, you need to make a decision on the type of investor you want to be. If you want to be a fundamental investor, I believe fundamentals and technicals actually go well together. But if you want to trade news and you want to trade those events, I believe that can be one of the most difficult types of trading environments. So the best thing I've always found is to follow the price action on the charts and to understand the basic fundamentals and basic concepts of what is going to drive the markets. All right, well, let's get stuck into the charts. So one of the first charts I want to bring up here is the weekly ASX 200. And I get asked about this all the time and I get asked about my opinions on it. So yes, we do trade the ASX 200. Yes, I'm a big fan of trading our market here because I am Australian. But it's going to bring up some interesting points between the S&P 500 today, the dollar index, and the ASX 200. So we're really stuck in a zone here. We like to do top-down analysis on this channel, and if you enjoy the top-down analysis, think about subscribing, hitting that bell, and of course, giving this video a thumbs up to help us out. But the idea is that we're in a trading range right now on the weekly. We can very clearly see that with the body closes above the 5,800 and of course beneath the 6,100. We've got some moving averages here. It's also trapping and condensing the price. Big move. We have not seen the recovery that of course the US have, but it's pretty interesting to see where the market's at. When we dive down and we keep these charts on, again, we can see the resistance here at the peak in terms of body closes. Body closes are the most important close when it comes to candle confirmation and technical analysis. And we are seeing a little bit of weakness since Melbourne, the second largest city in Australia, which is where I live, has been shut down. Let's then dive a little bit deeper and have a look at what's going on. So one of the things that I notice immediately is, and I'll just get rid of those lines, is that we are in a bit of a trading range, but we're also at what we call role reversal, where resistance is effectively going to become support. Now, why is that important? Well, this is the level that traders and investors want to get into the market at generally. So why is this? Well, most people will usually take the breakout. They'll usually take the close above. And what does the breakout bring? The breakout brings the fake out. And no one likes the fake out because they lose a whole bunch of money. And it's not the plan when it comes to trading. So what the plan should probably be is that we want to take the conservative, higher, statistically charged kind of trade. We want to take the statistics and we want them to be in our favor as much as possible. So here we have the role reversal, 60-40. The resistance is becoming support. And you may think, well, that's a good purchase. You can definitely buy this zone. But if you want to buy this kind of zone and you want it to, moon off into the stars and get a lot higher, you need to think about it from also getting involved with the participants in this trade. We want them to be involved. We want the big market makers to be pushing the market up more than just the trading in between. So I've put this line here at 6,100 for everybody, just to show the resistance where we're seeing it right now. But let's talk about what happened over here on the left-hand side. So we saw the price come down to this 60.40. It made a trough, it made a low here. It bulled up and made a peak. Then it came down and it made a slightly higher trough. Remember, it was higher than over here on the left-hand side. But it wasn't able to break past this 6,100. And that's what I want to tell everybody about today. We want to see a change of trend when we recognize this, let's say on a 4 hour, at least on a 1 hour, at least on a 2 hour. We want to see basically something like this occurring. When we see something like this occurring, it shows us that the market has found support here and that the participants in the market are bulling or buying the market up. It's that extra level of confirmation. So when we have a look over here at the right-hand side right now, what are we seeing? Well, we're seeing the market coming down. Is it finding support? It could. But it's not that we want to buy it straight away. We want to wait for the confirmation of the change of trend, or at least engulfing candle or something very, very bullish on the bigger timeframes before we're going to get involved. And I like change of trend the most. It's my favorite kind of, analysis thought process when it comes to trading these role reversals. So let's talk about where this may not apply. Well, it doesn't always apply. The conservative entry is not always the best, and that's where it comes to understanding your instrument. When we're talking about high volatility, so you're talking about maybe a 30 or a 40 VIX, or you're talking about Tesla as a share, for example, we need to be aware that we cannot take the same kind of conservative entries. Because how is this instrument related to in the past? How has it actually worked on breakouts? Well, when Tesla breaks out, it's a rocket ship to the moon every time. Look when Tesla breaks out past the peak over here. Important peak. We've got the trough down here, the higher trough over here, the peak, and then boom, off it goes to the next resistance. What has happened over here on the right-hand side? Well, it gets past that key 1,000 psychological level and boom, it's straight back off. Now, Tesla loves the rally. Look at the rally that happened earlier this year. It's kind of like Bitcoin, really. It reminds me of that. And I think it's because of the participants in it. We need to understand our instrument. Tesla is traded heavily by millennials and by people that are younger. They're used to having huge take profits and huge kind of percentage changes. And it's the type of share that gets it done. It's a mass speculated share. Whether we like to admit it or not, fundamentals may not make sense on this share. Technicals can, and you need to look for the key breakouts. And when they go, ride that trend. And then, of course, make sure you have some kind of action where you may want to take profit. Whether that's going to be $1,500 on Tesla just because it's a psychological level, whether that's $1,400, I don't know. But that is what you want to do. You want to have a plan every time, and we want to be able to recognize the instruments. So for Tesla, you wouldn't be looking at conservative change of trends because of the nature of the instrument. Remember, we need to follow the big players here, but the herd mentality in this is just like going to the shops today in Melbourne. When you go in through that door, well, guess what? You can't get in. You've got to wait in a line. Instead, what happens is it just everyone backs up wanting to buy the share and profit from it. Eventually someone's left hanging in the bag, or they've got too much toilet paper at home or something like that. But that is the way that this trade and this particular share works. So what about this S&P 500 today? Hey, well, it broke through the 3150 and closed above, and now we're seeing it pull back to the conservative zone. Here we've got some levels. We've got the 2950, 3000, 3150, 3230. We talked about these to death on the channel, so you can go and check out one of our other videos if you want to have a look at what's going on there. But notice how the market closed above. Many people probably bought the breakout in terms of traders, but notice then it comes down and it's testing the previous resistances over here, testing that structure in the market where the resistances will act as support. This is the kind of thing we want to be looking at. We want to say, okay, well, am I interested in this yet? Well, I actually need even more confirmation. And you may say, well, Tom, why the hell do you need more confirmation? I don't want any more confirmation when it comes to this trade. Well, the reason you want more confirmation is because the more reasons you have to be in a trade, remember we always talk about 3 to 6 on this channel, the more chance you have of being statistically correct. And when you're statistically correct, more times than you're not, you're profitable. And that's what we all want to be. We want to be profitable. So waiting for that change of trend can help us. We basically wait for the market to come down, bounce up, come down again, and create that sequence of events where it goes trough, peak, higher trough, higher peak. When it does that, that's the time that we want to jump on it and say, okay, well, we're interested in getting in this trade. When we understand the key areas in the market as well and key breaks, usually this type of change of trend will be more successful for us as well. And that's cool because everyone wants more success and more gap fill and more of that kind of thing. So the beauty of technical analysis has always been that you're following the trend and you don't really care about the fundamentals or anything else. You're just going to follow the money. And you don't want to be the person following the herd, because guess what the herd does? The herd loses. And over here, it's just like when the Fed does and the Fed comes in and ruins a lot of trades. Look at what the price action was telling us. Remember I said the conservative entry over here on the right-hand side. Well, here, we would have loved to have the conservative entry, wouldn't we? Imagine if the market had come up, change of trend, so we got that peak, we got that trough, the higher peak, and then it broke down. This would be a beautiful entry point to the short. It would show that the market has considered this previous support has become resistance. We've got that strong structure level of 3,000 psychological, and we are ready to get in the market. But that one small difference has made us part of the herd, part of the people in the shopping queue at our local supermarket freaking out about not being able to get their goods over the next couple of weeks. We don't have a supply problem. The market doesn't have technically a liquidity problem right now because of the Fed. So what you need to do is if you want to short the market, you have to wait for as much confirmation as possible. And hopefully that makes sense because it's really, really important. And I love sharing it with everybody. So what about the dollar index? Well, the dollar index is doing the same old thing we talked about yesterday. Basically, it closed below this trend line, closed, came back up, is testing the trend line. It's acting as resistance. And right now we're seeing some form of rejection from it. Dollar index to us means really risk on, risk off sentiment. It's no surprise that we have the ASX 200, we have the US 500, and we've got the dollar index all at these zones at the same time. That's the way the market works, and that's the beauty of seeing it all from multi-time frame technical analysis. It's really cool to be able to see all of that. So I get asked about the Dow all the time, and I thought I'd just quickly bring it up. The Dow is not the market it used to be. It isn't the one that you should be looking at. The trendsetter is the S&P 500. It is the cleanest technicals in terms of what the S&P 500 does, everything else does. And that's why we focus on it so much on this channel. It's the clear trendsetter from a technical analysis standpoint for all indices. In terms of the levels here, well, we've got 25,000. That's a clear support zone. We have a clear resistance at 26,000 and another one at around 27,500. And if it broke past that up here, we would expect it to go back into the highs, at least 29,000 at that point. That would be a very clean break and would seriously open up 29,000. For now, though, the Dow remains stuck in the kangaroo market, and there's nothing much we can do about that. We'll just keep looking at those S&P 500 levels and paying attention when it breaks out of this bigger, wider range. Hopefully everyone enjoyed this video today. If you did, put your comments in the video down below if you like this more kind of relaxed atmosphere. Hopefully you do. I'm more than happy to do this type of video moving forward with a bit of value, a bit of market analysis, and on top of that, a little bit of news. Happy trading, everybody. See you in the next video. Bye.